Valuations. Fundamental valuation for the top 3 largest gold mining companies in the world. Welcome to myfinancesteacher.org, where, as you see over here from the dates on these posts, I provide regular updates on the precious metals, energy, other commodities, the general stock market indices, and on crypto. Today, though, we're going to have a look at fundamental valuation of Newmont Mining, Barrick Gold, and Agnico Eagle. This fundamental valuation is based on the following factors. Of course, we look at the gold and silver prices, the amount of reserves and resources that the miners have in the ground, the costs of extracting those reserves, that's all-in sustaining costs. We look at the company's debts, we look at the taxes with some simplification, we look at the value per share, we also take time into account, looking at the discounted valuation, and I throw in a bit of a secret sauce on insider shares, because if the insiders, if the management are aligned with the shareholders, and if they're holding a large percentage of the shares outstanding, that is a good benefit to be considered. Now, moving on to the gold price, as usual, I'm going to have a look at 3 scenarios, starting with a conservative scenario of $1,600 for gold price and $22 for silver price. The balanced scenario implies $1,800 per ounce for gold and $26 per ounce for silver. And the optimistic valuation is based on $2,000 per ounce gold price and $30 per ounce for silver. And on top of that, optimistically, really optimistically, I think in the next couple of years, gold is likely to be far above $2,000. And if you disagree with that, if you think gold is going down from here for 1 or 2 years, let me know in the comments below. Now let's move on to the reserves and resources in the ground. Newmont has 91 million ounces of proven and probable reserves of gold and nearly 70 million ounces of measured and indicated resources. Newmont has nearly 600 million ounces of proven and probable reserves of silver and over 480 million ounces of measured and indicated resources. Barrick has proven and probable reserves of gold of nearly 66 million ounces and 92 million ounces of measured and indicated resources. Silver reserves for Barrick are at 140 million ounces and silver resources for Barrick are at 850 million ounces. Agnico Eagle is considerably smaller than the top 2, with proven and probable reserves of gold of 23 million ounces and measured and indicated resources of 15.3 million ounces. Agnico also has silver. The reserves of silver are nearly 30 million ounces and the resources of silver are nearly 33 million ounces. Let's move on to the all-in sustaining costs, long-term debts, and taxes. According to the midpoint guideline for 2021, all-in sustaining costs for Newmont are going to be $970 per ounce. For Barrick, it's going to be $995 per ounce. And for Agnico Eagle, it's going to be about $990 per ounce. Newmont has the most debt at over $5.6 billion. Barrick has only slightly smaller debts at over $5.1 billion. And Agnico has considerably smaller long-term debts at over $1.5 billion. I slashed the valuation a little bit, assuming a 20% tax rate. In reality, all these rates are quite different, and to save some time, I just simplify the taxes into 20%. Moving on to per share valuation, the number of shares outstanding for Newmont are somewhere around 800 million shares outstanding, with only 0.12% in insider hands. Barrick has quite a lot more shares outstanding at 1.78 billion shares outstanding. That's 1,780 million shares outstanding, but with a larger percentage in insider hands, with over 0.5% in insider hands. Agnico has only around 244 million shares outstanding, with only 0.1% in insider hands. And when discounting this valuation, as it takes time to extract the gold out of the ground and sell it, I'm going to apply the discount rate of 5% for all of these 3 miners. And we're going to discount this by the average reserve life, which is 14 years for Newmont, And if you throw in half of the measured and indicated resources, the average life increases to 19 years. For Barrick, the average reserve life is also 14 years, and with an additional half of measured and indicated resources, this increases to 25 years. For Agnico, these numbers are 11 and 15 years respectively. And before we actually move on to our valuation, let's have a look at some highlights which don't actually enter into the calculations. So perhaps you want to adjust these valuations a little bit according to these factors. The highlights for Newmont is that dividend might actually increase further if gold price stays confidently above $2,000. Newmont actually, as well as all of these miners, have very strong, very interesting exploration potential. So the existing reserves and resources are very likely to increase going into the future. And additionally, all of these miners have some reserves of industrial metals, such as copper, lead, and zinc for Newmont and Barrick, and copper and zinc for Agnico Eagle. And these industrial metal reserves didn't enter into the fundamental valuation numbers, so that might actually act as a bit of a cushion for your valuation to reduce some risk. Moving on to Barrick, this actually should be Barrick over here at the top. An interesting point here is that in September and perhaps later into the year, Barrick is going to return some $500 million in capital with extra dividends on top of their regular dividends. If divided by the number of shares outstanding, this turns out to be around 14 cents in September, and the timing of the remaining 14 cents per share is going to be announced in November. The other two highlights are similar to those of Newmont, so moving on to Agnico Eagle. There is an interesting exploration potential. There is some infill drilling in Canadian Malartic project during Q3 of 2021. So perhaps by the end of this year, there might be some good news here, which might be beneficial for the Agnico share price. Additionally, the production in Q2, as opposed to the production levels in Q1, have actually slumped a little bit due to the shortage of water in La India project in Mexico. And with the rains coming back, production is expected to normalize in the third quarter of this year. So these are some interesting factors to consider, again, given that they didn't enter into the valuation numbers. Now, talking about those numbers, let's start with the conservative valuation. Before we continue, let me remind you guys to subscribe to the channel if you haven't, and click that bell notification. Thanks a lot. Where we plug in the gold price of only $1,600 and only $22 for silver, and we look at only proven and probable reserves in the ground without looking at measured and indicated resources, never mind inferred resources. And that gives you a conservative valuation of only just over $40 for Newmont, which is around 32% below the ongoing market price of $58.88. So quite a bit of overvaluation over here. That's if you are really conservative in your valuations. For Barrick, this valuation is $11.30, which is again a 44% overvaluation, meaning that the current market price is a bit too high. But again, the question is if you want to be this conservative in your actual valuation. Perhaps you might use these numbers as some sort of a hint on what are the risk levels if things do really go south. And the conservative valuation for Agnico is 31.5 cents, which is again 46% below the ongoing market price of $59. So clearly the market, the share prices, aren't pricing in a gold price substantially lower than the current $1,780 or so. So if unexpectedly gold was to drop by another couple of $100 and stay there for a while, there is quite a bit of risk that the share prices of these top three miners might lose anywhere from a third to nearly a half, which is indicating some level of risk in a relatively conservative scenario. Moving on to the balanced scenario, where we plug in the gold price of $1,800 and only $26 for silver, and still, even in the balanced scenario, we only consider the proven and probable reserves in the ground, as if the company doesn't have any of the measured and indicated, never mind inferred resources. That gives you a valuation of $54.32 for Newmont, which is only 8% below the current market price. For Barrick, the valuation is $15.57, which is 23% below the market price. And for Agnico Eagle, the balanced valuation is just over $43, which is around 27% below the ongoing market price. So perhaps the market is expecting gold price to be a little bit higher here, perhaps anywhere between 1800 and 1900 going into the future, as the market price is a little bit higher than the fundamental valuation based on the amount of reserves in the ground. So if the gold price at current levels of around 1780 were to just go sideways, meander, and just be lazy to go in any direction, there is a bit of a risk with the share prices losing anywhere between 1/10 to even up to 1/3 of their value. And lastly, most excitingly, moving on to the optimistic valuation, where we plug in the gold price of, well, just $2,000. Again, as I mentioned, I think it's likely that over the next couple of years, gold price will be far above $2,000. And silver is also really likely to be much higher than $30 per ounce. And in this optimistic valuation, in addition to the proven and probable reserves in the ground, we add only half of measured and indicated resources. So even in this optimistic scenario, we are staying somewhat conservative, including only half of measured and indicated resources, never mind any of the inferred resources. So this optimistic valuation for Newmont is over $85, which is around 46% above the ongoing market price. The optimistic valuation for Barrick is over $29, which is also 46% above the ongoing market price. And the optimistic valuation for Agnico Eagle is over $68, which is only around 16% of the ongoing market price. So there is clearly some attractive upside on these miners if gold price were to stay somewhere around $2,000 for a while. But perhaps we don't really see much of a doubling or tripling in the share prices. Perhaps that's an indication that the gold market participants are kind of optimistic and are kind of expecting gold to be noticeably above the 1800 mark sometime into the future. Especially if you look at this recent weekly chart of gold, look at this beautiful weekly candle over here, where gold dropped by over $100, giving you this very long bullish hammer candle. And at the time when gold was somewhere around $1,700, that's when I actually made this post to the members at myfinancesteacher.org, stating that this intermediate cycle in gold has finally finished and it's time to increase our positions in precious metals. So if you want to get timely updates on precious metals, the general stock market indices, cryptos, energy, and other commodities, join us at myfinancesteacher.org. For now, have a very pleasant day and good luck in your trades.